What's up, subscribers? Welcome back to the channel. In this video, we're going to be talking about a stock that one of you guys recommended I look into. Medicine Man, trading under the ticker SHWZ. We'll be taking a look at Medicine Man's business, taking a look at their financials, and also reviewing their stock chart. But first, if you'd like to get updates about our new videos discussing the stock market and personal finances, as well as being entered into our 1,000 subscriber giveaway, be sure to hit that subscribe button if you haven't already. And while you're down there, be sure to check out the links in the description to get your free shares of stock from Robinhood and Webull if you haven't already. So grab a cup of coffee or your favorite beverage of choice, and let's jump into it. Now, if you're watching this video, then I have a feeling that you probably already know what Medicine Man's business model was all about. But for those of you who may just be hearing about Medicine Man, it's a Michael Jackson company that's headquartered in Denver, Colorado. Founded in 2009, Medicine Man operates under the brand SHWZ, with segments including products, licensing, and consulting. The products segment sells merchandise directly to customers through e-commerce through the company's website, as well as their retail location. Taking a look at Medicine Man's most recent 10Q for the quarter ending September 30th, they currently have just shy of $3 million of cash and cash equivalents sitting on their balance sheet, with their total current assets able to cover their total current liabilities with still about $1.3 million to spare. Year over year, however, we have definitely seen Medicine Man decrease their overall cash holdings from about $11.8 million down to $2.9 million. But they're a small cap company and still growing rapidly, so I'm not as concerned about that right now. Medicine Man's top-line revenue has increased nicely year over year, posting approximately $7 million in operating revenue this past quarter, up from $2.1 million year over year. But unfortunately, that has not yet resulted in profitability, with Medicine Man posting a net loss of $2.9 million this past quarter. At the time that I'm recording this video, it's Wednesday afternoon, December 30th, the markets are open, and Medicine Man is trading at $1.51 per share. Now, like I mentioned, it's an extremely small company, currently with a market cap of $63 million. And since Michael Jackson is not yet legalized here in the United States, it's trading on the over-the-counter markets. So what are my thoughts about Medicine Man as a potential investment? Now, with everything that we just said, it's obviously a very speculative investment. And if you choose to put money into a company like this, you have to do so being willing to accept the risk that you could potentially lose your money. But with that said, I definitely do see some potential enormous upside for Medicine Man. With the House of Representatives just recently passing the MORE Act, the Georgia Senate runoff election still ahead, and the upcoming inauguration of Democratic President-elect Joe Biden, I think that potentially in the not too distant future, we could see federal legalization happen here in the United States. I've gone on record here on this channel previously talking about some Canadian companies that I think have a lot of potential here in the United States as well. But honestly, when comparing the market caps, I think that an American company has a lot more potential upside. Many of the Canadian companies were overbought back in 2018 whenever we saw federal legalization hit Canada. And unfortunately, shortly after that announcement, we saw that bubble burst, with many investors losing a lot of money if they bought into that bubble. But since it's not yet legalized on a federal level here in the United States, that means that US-based companies cannot yet be listed on the New York Stock Exchange. So I believe that these companies potentially offer a lot more upside than the Canadian companies. Now, Medicine Man certainly is a risky investment, and it also has competition here in the United States. But at the levels that it's currently trading, it might be a risk potentially worth taking. What are your thoughts about Medicine Man? Is this a company that you would consider investing in? What are your thoughts about the risk versus reward? Do you think that there are other American companies that are better investments than Medicine Man? Be sure to comment down below and let me know what you think. And while you're down there, if there are any other stocks or topics that you want me to talk about in future videos, please be sure to comment that down below as well. As a reminder, this video is for entertainment purposes only. I am not a certified financial planner. I'm a resident physician with an interest in personal finances and investing. Please make sure you're doing your own research before you make any financial decisions. If you haven't already, be sure to check out this video about how to participate in our 1,000 subscriber giveaway. And please be sure to smash that like button and click on the subscribe button for the YouTube algorithm and to help support my channel. Thanks everyone. Have a great day.